unveiled new details on its plans to make power companies buy and trade rights to emit greenhouse gases.
On Tuesday, China said that the first phase of its nationwide carbon emission trading scheme will be focused on the power sector, as the government outlined details of the program, which is expected to become the world's largest.
2 years after China's President Xi Jinping announced that China would launch a carbon market very soon, China today has delivered on its promise. The world's biggest emitter of greenhouse gases has come up with a carbon trading system. This is China's biggest ever step to reduce carbon emissions.
China unveiled new details on its plans to make power companies buy and trade rights to emit greenhouse gases. Plans to create the world's largest carbon market have been in the works for years. With this system, companies must have permits to emit. If they go over a government-set cap, they pay more. If they stay under, they can sell their unused allowance. China's trading system will initially only cover companies that emit 26,000 tons or more of carbon per year. An unnamed government official told courts the initial price per ton of carbon will likely be around $7.50. It's expected to gradually rise to $45 per ton. It's unclear when trading will begin.
On Tuesday, China said that the first phase of its nationwide carbon emission trading scheme will be focused on the power sector, as the government outlined details of the program, which is expected to become the world's largest. National Development and Reform Commission Vice Chairman Zheng Yang said at a briefing that trading will be based in Shanghai and will involve 1,700 power companies and over 3 billion tons of carbon dioxide annually. Accounting for a third of China's total carbon emissions, that volume means that the scheme will eclipse the European Union's, the world's largest, which is expected to cover about 1.4 billion tons of emissions this year. The scheme is seen as a major step in the world's #2 economy's efforts to meet its commitment to the fight against global warming.
China's resolve, aims, and policy moves in dealing with climate change will not change.
China, one of the top carbon emitters in the world, now is putting its words into action. The carbon emissions trading system has been launched, which means companies can trade their carbon emissions quotas just like commodities.
For those companies whose management is bad and have poor equipment, the more they produce, the higher the pressure they'll face, because they need to spend much more money on buying the carbon emission quotas.
Under the Paris Accord, China has promised to cut carbon emissions by 60 to 65% per unit of GDP by 2030 compared with 2005 levels. In the meantime, it would boost its use of non-fossil fuels, making them account for 20% of China's energy consumption. Shanghai is one of the pilot cities starting in 2013.
Now, the quantity of carbon emissions has decreased by 7% in recent years, and the use of coal went down by 11.7%.
Last week, the Chinese-led Asian Infrastructure Investment Bank approved a $250 million loan to connect some 220,000 rural Chinese households to a natural gas distribution network. But supplies are still said to be falling short of the surging demand. When it comes to reducing carbon emissions, it's not always about what the governments can do. It's also about how ordinary people can contribute. A UN report says that the process of producing, transporting and packaging the food waste can generate more than 3 billion metric tons of carbon dioxide. And if this amount of food were a country, it would be the third largest emitter of greenhouse gases, just after the US and China.
2 years after China's President Xi Jinping announced that China would launch a carbon market very soon, China today has delivered on its promise. The world's biggest emitter of greenhouse gases has come up with a carbon trading system. This is China's biggest ever step to reduce carbon emissions. Now, under this system, power plants will have allowances to emit a certain amount of carbon dioxide. Plants that undershoot their targets will be able to sell their allowances to other generators. This is expected to restrict emissions effectively instead of making the companies pay for what they really emit. Now, the overall allocation of allowances in the system across the power sector is also not yet known, nor is the likely price on carbon that should result. Now, just to understand what this announcement means, we're joined by Reid Landberg of Bloomberg News. He's joining us from London. Reid, thanks so much for speaking with us. I want to start by asking you, Considering China has announced this carbon market, how exactly will this help in controlling carbon emissions?
Well, if they actually go forward with it, it would be an enormous step. China, of course, is the biggest polluter in the world, and what they're talking about would increase to about 25% of the world emissions that are covered by carbon trading of some kind. We've got carbon trading systems in Europe, there's a couple in America and elsewhere. This would be a dramatic expansion of that.
Right, Reid, but it's interesting because, when we've seen these carbon trading systems in Europe, they haven't necessarily worked. We saw that even Australia scrapped, their version of this in 2014. There were pilot projects running in China as well, and they didn't seem to work that effectively. How exactly will this work? I'm guessing this is not as broad a scope as a lot of, climate change experts would have actually expected or hoped for. It's going to be a much narrower scope with only state-run power corporations initially?
Yeah, that's right. And we're actually getting as many questions as answers in today's market announcement. They haven't come forward with a date for when it starts trading. We don't know exactly how the permits are going to be allocated. What we do know is that the system is now going to cover about 1,700 companies in the utility sector. That's a lot different from a year ago. A year ago, they were talking about almost 8,000 companies. So China itself is reining in its ambitions, and it will be interesting to see where they go from here, what the next steps are.
Right, John, and I want to understand something from you, Reid. When it comes to a carbon trading scheme, how would this one be more efficient than something more direct, say a carbon tax, per se?
Well, there's different arguments for different systems. A trading scheme is meant to be a sort of incentive where companies are encouraged to make reductions over time. A trading system, it's thought, provides them the spark to figure out their own way to cut emissions. A tax is just a flat tax on carbon emissions. It's a lot simpler, but it doesn't leave the companies flexibility to make the cuts when they want, to exceed emissions targets when they need to.
And when we're talking about this particular carbon trading system, China's system will adopt a cap and trade rule. I'm guessing by which the biggest corporate polluters purchase credits from those that don't emit as much. And companies are encouraged to reduce their emissions so they can actually sell their unused allocations. Is this a system which has worked, in other economies? And is this something which would perhaps work for a country like China, considering they are the biggest polluter out there?
Yeah, well, we've got a long track record of carbon trading now. In Europe, it's been going for more than 10 years. They started trading in 2005. And it's certainly, carbon trading has forced companies to think about carbon in a way they weren't before. It's forced them to start reporting, and where they measure and report their carbon emissions, they sort of start to think about ways to reduce them. So in that way alone, it becomes an efficient tool, a preferred tool of policymakers to bring those carbon emission reductions. It's less of a blunt force tool than, say, a carbon tax.
Reid, it becomes interesting that this announcement has come at a time where things are very different in the US, of course, because when we look at what President Donald Trump is doing with Obama-era laws when it comes to combating climate change and reducing emission of greenhouse gases, and then we also see, he's actually promised not to be a part of the Paris deal altogether. That was something that the whole world had actually hoped for, and China and America was sitting across the table with other nations to solve this particular problem. Could we see China taking the lead in this sort of mission to tackle and combat climate change?
It's quite possible. We've seen China be quite vocal about its ambitions to cut emissions, to work on the environment, even as Trump came into office and said he was going to promote coal. Of course, it was China and U.S. President Obama that were there at the Paris Agreement that sort of stitched together that agreement and allowed that to go forward, the first real emissions cuts everywhere in the world. So the tone coming from China is very different from the one coming from Trump and the U.S. administration. I don't see any. There doesn't seem to be any change in that coming. It seems China is really on board with emissions cuts, really on board with moving forward on cutting pollution of all kinds.
You know, the best example of something like this not really working out perhaps would be the European Union. And we saw what happened with, permits being dished out almost for free and perhaps not having the same value that they were, intended to have initially. I want to understand what lessons can China learn from, well, this whole experiment in the EU?
Well, one of the issues with carbon markets in general is just the complexity of measuring emissions, of figuring out who's making the emissions of the sort of permits that industrial polluters ought to be given, and then how to keep prices rising over time, what an ideal level of prices is. And that's a very difficult balance that the European Union has tried to strike. It's still trying to work on a way. It's still trying to work on measures that will make its system produce the prices wanted while not strangling industry. So it's a very delicate balance that policymakers have got to come up with, balancing the need for a carbon price that's meaningful, that makes people want to change, against one that is something that industry can live with, that doesn't make industry say we have to shut off the lights tomorrow.
Right, it's interesting because whilst this is perhaps a scaled-down version of what we expected 2 years ago when it comes to China's carbon trading plan, from what I understand, with 1,700 companies and about 3 billion metric tons of emissions, this would still be bigger than the European Union system. I'd imagine that considering some of these massive companies actually involved, there would be some sort of criticism from industry and the business community as well.
Well, absolutely. It's going to be the biggest carbon trading system in the world, even though China has scaled it back from where they were talking a year ago. We haven't heard a lot of criticism from the business community in China about that. But the system is quite different over there. Of course, you have government and industry work very closely together. They're brought together by essentially industry lobby groups that are conduits for government policy flowing to companies, for company views flowing up to government. So there's a lot of consultation that gets done between policymakers and industry before any policy gets put down. I think it would be surprising to see full-throated opposition from any company in China to what the Chinese government is doing. That would be very unusual for that country.
Right, Reed, and I'd imagine that, well, the carbon market is expected to be fully functional in China by 2020, considering their commitment to actually reduce their dependence on industries that actually emit these greenhouse gases as well.
Well, we'll see. We, of course, don't have a start date for when trading will start, and there's still a lot of unanswered questions about how permits are awarded, when they'll be awarded, what other industries are going to be swept into the system over time. There's still a lot of questions out there, so when it all starts is one of them, still an open matter.
Right, Reed, thanks so much for speaking with us. But of course, China has unveiled its plans for a national carbon market. It's going to be the world's biggest trading system for the climate warming emissions.
And we are joined now by Michael Dorsey. He is the co-founder and vice president of the strategy of the U.S. Climate Plan, as well as director of the Center for Environmental Health. It's a real pleasure to have you here. Thank you so much.
Susan, thanks for having me.
Tell us how the carbon emissions trading system works.
Well, basically, the system is fairly straightforward. Basically, you get emitters or polluters to set a cap on their emissions. The government controls that cap. And then there are extended allowances to trade, whether or not they're going to make the targets or not, or whether they're going to be above or below. They can trade and buy and sell those allowances to essentially, it's a right to pollute. So it's a fairly regulated market. The government controls the cap on the process and regulates those polluters that are involved in the process. And the polluters have the option or the ability to buy and sell the rights to pollute, essentially the emissions allowances.
Is it working?
Well, right now, globally, it's certainly not. The European Union started off first. They led the initiative almost a generation ago in the early noughts. Starting in the late 90s, they began to assemble the process. Many jurisdictions, particularly California and Canada and others, followed suit. What we've seen is a sustained, suppressed low price in the trading systems in the formal regulated markets like in Europe. That price signal hasn't really been there in a robust enough manner. And oddly enough, China is picking the price to begin trading around $10 a credit. That was the same beginning point for Europe, almost 20 years ago.
Well, it seems like, China has really taken the lead on this. The U.S. has taken a big step back. How do we come together as a global community to work on this?
Well, right now is really a special moment, I think, for China. You're absolutely right. China is surging ahead and leading, not just in the region in Asia, but really globally. And that's critical and important. But really, where we start at this moment is so important. We can't start with the benchmarks of a generation ago, of 20-odd years ago. We've got to start more ambitiously. The China targets, to reduce emissions by about a quarter or so by 2030. Most of the world is on course to go to 100% renewable energy by 2030. We've got over 50 cities in the United States that have that target enshrined in policy and in regulations. We've got really ambitious initiatives. So really the price needs to be higher in China if it's really going to be successful to get out ahead. The ambition needs to be catalyzed and injected into the process if they're going to really truly lead the world. The question is, are we going to have a mediocre beginning, or are we going to have an ambitious beginning? Right now, we've got a mediocre one.
So as the rest of the world moves ahead and the U.S. stands at a standstill, really, what kind of pressure is the U.S. facing?
Well, I think it's facing tremendous pressure. The reality is that even though China is starting from a mediocre point, it's surging ahead, and really with a market that's double the European, currently the world's largest marketplace, is significant. But again, being middle of the class in a class that's lackluster isn't all that impressive, let's be honest. So the challenge really is first, how are we going to have a high price of carbon in China? How are we going to not just double it or triple it? How are we going to get it maybe 10 times above that $10 baseline where they're starting at to really drive the innovation in the sector of reducing pollution? And then how are we going to move those monies that get created in that marketplace towards driving the growth, the dynamic growth of renewable energy, solar and wind, which China is, again, leading the world in, but could do so much more.
How long before we're able to actually measure China's performance versus, let's say, Europe's?
I think we'll be able to measure it really quickly. Right now, I think it's already sort of the preliminary baselines are already there. We don't have a lot of liquidity in the marketplace. The Chinese are seeking partners. That's why they're in conversations with California, with Europe, to get liquidity into the marketplace. A lot of people are skeptical of this. The largest banks on earth left the European emissions trading system years ago. They haven't actively engaged in the California system. So a lot of the capital is skittish on this because they don't see the large, sort of steps that need to be moved forward happening in those marketplaces.